Bitcoin is witnessing a tough battle between the bulls and the bears near the $40,000 level. Buyers seem to be positive about the long-term prospects of the newly launched standing making Bitcoin exchange-traded funds, ETFs, but the sellers are focusing on the $3.4 billion in outflows from the Grayscale Bitcoin Trust. Apart from the crypto-specific issues, some analysts are worried about the worsening macroeconomic situation. Arthur Hayes, the former CEO of BitMEX, cautioned investors in his latest blog post that Bitcoin risks a fall between $35,000 and $30,000. According to Hayes, the United States Federal Reserve could find it difficult to cut rates in the near future as rising shipping costs due to the Houthi attacks on ships in the Red Sea could boost inflation. Several analysts have turned bearish in the short term, but solid demand from the newly launched Bitcoin ETFs may limit the downside. Within 7 days of their launch, the 9-spot Bitcoin ETFs have amassed more than 100,000 Bitcoin. What are the crucial levels that may attract buying in Bitcoin and altcoins? Let's analyze the charts of the top 10 cryptocurrencies to find out. And then Bitcoin plunged below the $40,000 support on January 22nd, indicating that the bulls are rushing to the exit. The price slipped near the strong support of $37,980, which is likely to hold in the short term. And the price is attempting to bounce off $37,980, but the bulls may face stiff resistance at the 20-day exponential moving average, $42,116. If the price turns down from 20-day EMA, the BTC USDT will risk a fall below $37,980. In that case, the pair may slump to the next strong support at $34,000. And what else going is the Afro people there where it already had looks for investors sorting out with African tempity, and the system is actually critical of the bill. When the bills they're going is buyer at the mid that will momentum may pick up after the pair jumps above $44,700 and as 744. And when 19 bounced off the 20-day EMA from $2,395 on January 19, attracted further selling by the bears, who tugged the price below the breakout level of $2,400 on July 30. Number 8, the 20-day EMA has started to turn down, and the RSI is near 40, indicating that bears have a slight edge. Sellers will try to sink the price to create the strong support at $2,100. The bulls are expected to protect the level with all their might, because a drop below it may start a new downtrend toward 1900. This negative view will be invalidated in the near term if the bulls maintain the ETH USDT pair above the downtrend line. The pair will then try to rally to pay $16.14 and subsequently to $2017.14. In BNB's reverse direction from the downtrend line on January 22nd and closed below the 20-day EMA $305, indicating aggressive selling on rallies. The price action of the past few days has formed a descending triangle pattern, which will complete on a break and close below $288. If that happens, the bears will try to drag the price to the neckline and then to 232. And it came translated, if I got in forever, the contrarily, if the price bounces off $288 with strength, it will suggest that the bulls are fiercely protecting the level. The BNB USDT pair cannot questions about our MA. A break above this level will pave the way for a possible rally to the downtrend line. And Solana has been in a pullback for the past many days. Their strength and their hold further by pulling the price below the 50-day SMA, $91 on January 22nd. The moving averages are on the verge of a bearish crossover, and the RSI is in the negative zone, indicating that the path of least resistance is to the center downside. There's a minor support at $77, but if this level gives way, the Sol USDT pair could complete a 100% retracement and fall to $64. The downtrend line is the major barrier to watch out for on the upside. If buyers drive the price above the downtrend line, it will suggest that the corrective phase may be over. The pair may then jump to $107. And XRP turned down from the 20-day EMA 56 cents on January 15th and slipped below the immediate support of 54 cents on January 19th. The 20-day EMA is sloping down and the RSI is near the oversold territory, indicating that bears are in the driver's seat. Sellers will try to tug the price and then see if that will help you in 50 cents to $8 million an hour of the price or total about. Either that can be consistent, or if they can remind me to pay freedom, or again, below 46. The second of minute, the retest of 41 may be on the card. If bulls want to prevent the downside, they will have to propel and maintain the price above the downtrend line. The pair may then rise to $67, and Cardano has been falling inside a descending channel pattern for the past few days, indicating that higher levels are being sold into. The downsloping 20-day EMA and the RSI in the negative territory indicate that the bears are in control. Sellers will try to strengthen their position further by yanking the price below the channel. If they do that, the selling could accelerate and the AVA USDT pair may dive to 35 cents. Instead, if the price bounces off the support line of the channel, the bulls will attempt to overcome the barrier at the 20-day EMA. If they succeed, the pair may ascend to the downtrend line of the channel. Avalanche attempted a relief rally off the $31 support on January 19th, but the weak bounce shows that bears continue to pound on every minor rise. Intense selling pressure pulled the price below the $31 support on January 22nd. The bulls are trying to push the price back above the breakdown level of $31, but the recovery is likely to hit a wall at the 20-day EMA, $34, $32. If the price turns down from the 20-day EMA, the AVAX USDT pair may fall to $24. On the contrary, if bulls push the price above the 20-day EMA, it will signal that the selling pressure could be reducing. The price may then climb to the 50-day SMA, is $37.63. And Dogecoin started a recovery on January 20th, but the bulls could not clear the overhead hurdle at the 50-day SMA from 20 cents. This shows that bears remain active at higher levels. The price has reached the strong support near 7 cents, which is held on 3 previous occasions. If the price rebounds off this level with force, it will suggest that the DOGE USDT pair may oscillate between 7 cents and cents for a few days. Instead, if the price continues lower and breaks below 7 cents, it will open the doors for a possible fall to 6 cents. The first sign of strength will be a rise above the 50-day SMA. The pair may then climb to the $10 cents to 11 cents resistance zone, about as Polkadot plunged below the neckline of the head and shoulders pattern on January 22nd, indicating that the bears are in command. The bulls will try to push the price back above the neckline, but are likely to face stiff resistance from the bears. If the price turns down from the bear neckline, it will signal that the bears have flipped the level into resistance. That will increase the likelihood of a further downside to $4.80. On the contrary, if bulls push the price back above the neckline, it will indicate strong buying at lower levels. The downside risk will reduce after the DOT USDT pair, and it sustains above the moving averages. Chainlink has been trading inside a large range between $12.85 and $17.32 cents for several days, indicating buying at lower levels and selling on rallies. Both moving averages are flattish, and the RSI is just below the midpoint, indicating a slight advantage to the bears. The Link USDT pair could drop to the support of the range at $12.85, where buying is likely to emerge. If the price rebounds off this level with strength,
it will suggest that the range-bound action may continue for some more time.
The bears will gain the upper hand if they sink and sustain the price below $12.85. That could start a fall to $12 and thereafter to 10.50 cents.